Bill, how are you?
Hey, I am doing wonderful. Thanks for having me here today.
We have Abi as well. Hey, Abi.
Hey, Mukund. Hi, Bill. Welcome. Thanks for coming.
Hello. Yeah, no, my pleasure. Was excited to chat with you guys today.
I'm in Seattle. Abi is in Boston. Bill, which wonderful, warm, seaside resort are you at?
I am at the home office here in Marin, which is a nice, beautiful community in the San Francisco Bay Area.
I love Marin. I love Marin. I had a couple of companies back in the 90s. I shouldn't be dating myself, but where there are a lot of networking companies. When I was Cisco, used to be in Marin County and in Marin
Um,
particularly. So we had a good lot of Okay, awesome. So today's topic is the benchmark survey that Bill and team did. Now, Avi, do you want to set a little bit of context? I know you were talking about it pre-call. Getting this kind of data is very difficult. So can you set the stage, Abhi, and then we'll pass it over to Bill on why this is important and what we can do with this kind of benchmark survey data?
Yeah, no, absolutely. I think, let's be honest, what Bill has done is incredible, one in a lot of ways, but one majorly is that we don't actually, you know, don't find any good like research report, which is live, practical, has come out from a specific segment right on time, which we can just like pick up and look like, how do I operationalize? Well, this is the start of 2025 and the world has changed. There's a reset. There's the old playbooks are dead and there's new and there's a lot of confusion. But what is everyone's doing? What's my peers doing? So getting peer-backed benchmarking data with facts and finding in an more trusted, independent way, I think is goal right now. So kudos to Bill for doing this and his team. So really excited about, diving in. Bill, why don't we jump in understanding what was the like you were like just sitting and then thinking about the same chain. What's the genesis? Give us a little bit of background there.
Yeah, so for me, I had been CMO for a bunch of different companies. I was with Slack as their CMO, Zendesk CMO, Salesforce, I was their SVP of Marketing. And I just every year when it come around to budgeting for the next year, that was always challenging because it was like, well, how much do other companies budget for marketing, right? And where do they put their investments in? And I'm a big, data-driven marketer, so I like to see trends or just what else is happening in the market space. And I just thought that was always a little bit frustrating because it was just hard to find benchmarks. I just felt like, occasionally you'd see like a VC company would put one out. There were ones from maybe like Gartner or Forrester, but you had to either be a subscription to them or you'd have to pay $200,000 to be part of this one. And, I had talked with a couple of other people, John Miller, Carolou, Ray Reich, who was from Benchmark. And we had all just kind of talked about like how there was this big pain point and there weren't a lot of just good benchmarks for these, B2B marketing companies, specifically within the SaaS and AI space. And so we were like, hey, let's do something like that, right? And I currently serve as an advisor to a bunch of SaaS and AI companies, and same thing, like they really wanted this type of data, and so it was like, let's do it. And so we kind of just used our own networks, and we talked to over 200 CMOs. We had over 300 companies that had submitted information that went through. We kind of crafted the survey really just as like from a CMO perspective, right? It wasn't like an outside research analyst who made the survey. We're just like, well, what would I want to know, right? Like if I'm crafting my budget and where we put it. And the other thing that's really important for me too is like, I've always been a big believer that go-to-market is always evolving. And especially in B2B, you need to evolve and have a modern go-to-market playbook. And it was interesting because I spent the first 15 years of my career in B2C. And when I went over to B2B, I saw a lot of, to be honest with you guys, just really old dated playbooks. They were all based on an outbound model, sales, top down, selling into the CIO, CTO, super long deal cycles. Very few people knew about their companies. They had awareness issues. They hadn't invested in brand at all. And it was just kind of like, I don't know. I was like, guys, there's better ways to do this stuff. Like I came in like, I loved SEO or content or inbound or virality loops or high NPS or, targeted ABM campaigns. There's so many different ways to grow outside of that traditional SLG playbook. And so I think like this was a really fun way for me to kind of tease some different answers out as far as like, hey, how are people adopting different go-to-market playbooks? Like, what is the current state? How are they pricing and packaging? And it was just a super fun exercise to go through.
I see.
Awesome. Okay, so Bill, you're going to share the results first. Now, this is
Yeah.
something that is fresh off the press, hot off the press, however you want to call it. And then we're going to, obviously, Abi and me will have a bunch of questions as well. Let's keep this as interactive as possible, but over across to Bill.
Yeah, awesome. So again, thank you guys. Let's see. Can you guys see the screen okay?
Love it.
All right, we're good there. All right, let's go through this here. So we've got the, this is the actual report itself. So a couple things. Hey, if anyone would like this report, feel free to reach out to me on LinkedIn. Just send me a message or a connection invite. I'm happy to send it to you for free. We're not really, charging for this. This was kind of like a, organic thing that kind of put it together. And, we wanted to first thank anyone that had helped with putting together this, submitting their information, and also just make it very accessible to everyone here. So here's a team that we work together. John Miller is awesome at Marketo. Carol is fantastic. She was at Atlassian. Ray built Benchmark It. So they do a lot of these kind of custom benchmark surveys. So they're fantastic to work with if you ever do want to kind of go down that path. The companies we worked with, very diverse, again, mostly in the B2B SaaS space, but you would see, different levels of revenues, from seed all the way to, much further developed, DE further down there. By target market, we had a nice mix of SMB, mid-market, and so forth. I thought like this was maybe one interesting finding here was the 24 growth rates. And I don't know what it is, but I think it's a little bit selection bias where we only hear about companies that are growing at 500% year over year and are doing amazing and everything's roses. And then when we got these back, I was like, wow, like a lot of these companies are in this, sub 40% growth rate, right? Some are above it, but it's not one where everything is, roses and pink. And I think that's good for seeing some of these, growth and benchmarks too. Is like you can kind of see like, oh, look, I'm not alone, right? Like, okay, I fall into this group and a lot of other people are in this group as well. One really interesting finding.
Bill,
Yeah, go ahead.
I have a question. If you go back,
Yeah.
what would you think now? Sorry, go back to the slide, which is the growth rates, the slide number 4.
Yes.
What do you think would have been this same thing COVID timeframe? So 2021, 22. Do you think you'd have seen the good mix that you're seeing of 20%, 20%? Literally, it seems like it's 25% across most of the places. 10%, 20%, 30%, 40%. It's like literally quarter everywhere. Do you think you'd have seen the same thing during COVID, or would it have been skewed a little bit more towards the 40% growth rate? And that has changed dramatically, as you.
Yeah, from the data that I've seen, COVID was a crazy, unique time where a lot of these B2B SaaS companies saw, spectacular growth, right? And I mean, that was back in ZIRP days, zero interest rates. So, everything was great. If you were in SaaS, it was like the golden age, right? And then, of course, with the high inflation, and that really hurt the future discounted cash flows and evaluations. And so a lot of SaaS companies, they slowed down as they had to become more capital efficient. They didn't know when their next round would be. And I think that forced even more people to think about like, what is our go-to-market model? Like, how do we not just grow, but grow capital efficiently, right? And the growth rates did come down is part of that. So I think that was a great point there, that these have changed a lot, even with just in the last 3 or 4 years. Cool. So one interesting one here is like, we saw kind of like we asked them like, hey, well, what go-to-market model do you use, right? And you saw like SLG, or I call it sales-led growth, is still one of the most common, models out there, right? And it was a really big chunk there. But on the interesting side, the licensing model, like I remember specifically, I wanted to ask this question because I'm like, I'm a big pricing and packaging guy. And what I had started seeing is some of the clients that I've worked with, we had really worked to put in outcome-based pricing. And what we saw is that that had grown now to 8% of the overall mix of these different pricing models. And outcome-based pricing, it's simply like, hey, if you run, let's say you sell customer service support software, you could charge that by seats, you could charge it by how many times they're using it, or outcome was, hey, you could charge it based on a successful ticket that was resolved. Maybe you charge $1 for every successful ticket. And I think what's happening is like, obviously we're seeing this flood of new AI autonomous agents coming out. And if they are able to price more based on outcomes, so hey, we will take a small percentage of the increase in pipeline we deliver, or we will just charge you on a successful ticket resolved, right? That really lowers the risk for people trying them out. And I just thought that was an interesting finding, right? Like, subscription usage based, those have been the dominant models. And now we're starting to see some different experiments with how people are going to price moving forward.
What do you think is the interesting part on the right-hand side, go-to-market motion, or to my right, founder-led? I would assume that is very small, early-stage companies, correct? Or am I missing something? That should be very early-stage companies.
Correct. Yeah, that was generally, and we have a longer, like 140-page deck where you can see a lot of this. And we also built an interactive benchmarking tool where you can go in and say, hey, I'm a founder-led company. What are our growth rates? Or lots of ways to different slice and dice that data. But yeah, generally founder-led is more of those early seed Series A type companies.
Awesome. And Bill,
Yeah.
just curious, anything being a CMO yourself, any big surprises? And I know you had to cover the report in further more detail, but what was your personally like? What was your like? You were surprised the most?
There is a really cool finding here where we have, I shouldn't say surprise, but I was like, oh, this is awesome, right? Where companies that had invested more in marketing grew faster, right?
Mm-hmm.
And it was a little bit of a chicken because we saw that and we were like, interesting. Is that cause and effect? Like, which one is it, right? The faster growing companies invest more marketing, or the ones that because you invest more marketing, you're faster growing? And there purely was like, it was correlated, but we don't know like which one it was, chicken and the egg. But yeah, there were like maybe like 5 or 6 that I thought were really interesting. And I'll kind of go through a couple more here as we go through kind of the process here. Let's see. So this was an interesting one to start with, just budgets, like, because I get asked this a lot, like, hey, how much should we be investing in marketing? How much should go to brand versus, demand gen or these other types of things. And what we saw is that historically, like, when you look at a lot of different companies, one of the common ways you can look at it is just, hey, marketing budget is a percentage of just your overall revenue, right? And that was 9% for 2024, and we saw it move up slightly to 10%. So that was kind of encouraging. I think you're starting to see like more people starting to reinvest. I think SaaS is such a unique space because like we were talking earlier with COVID, I mean, it skyrocketed it. Everyone was getting crazy valuations, and all of a sudden the economy changes and everything pulls back and these valuations drop. And so everything was super tight and marketing was getting cut. And now it's like, I think we're starting to see it start to come back, right? A lot of SaaS companies have adopted AI, and there were, pure play AI companies that contributed as well. But that was an interesting one. I'm starting to go up there, a little bit more confidence in the budgets.
That's what is interesting, right? The 25th percentile grew by 100 bips. But if you look at the top companies, they grew by 400 bips, almost 4 times the budget increase for the top 25% versus the bottom 25%, right? So the growth has not only been sequentially higher for everybody, but the growth at the top is even higher than the growth at the bottom.
Yeah. And I think that's what happens a lot too when I work with these SaaS and AI companies. Like when you really nail the right go-to-market model, it's like the VCs, everyone just wants to pour gasoline on that model, right? Like you just want to get that flywheel going faster and faster. So certainly like, when you've kind of nailed the growth side and you've figured out that go-to-market engine, it's very easy to scale. Cool. So let's see here. What's next here? This was kind of an interesting one, right? So this was, we kind of looked at like just where are the budgets going, right? And so what we saw is as you started getting bigger, right? Like, especially when you're over 250 million, you started to see more of that budget going back to events or field marketing. So I'd still say like events for me are always like really interesting because I always look at things from a go-to-market lens of like, hey, what is the efficiency, how scalable it is? And events also I think are a little bit renewed focus just with COVID and people not being able to see each other. And also there's just so much AI generated stuff now, which sometimes is great, but also like now it's like half my stuff. I'm like, wait, did a real person write this to me on LinkedIn, or was this just like an AI SDR, right? So I think like sometimes real face-to-face stuff is going to be interesting moving forward. And so you're starting to see a little bit more investments on the event side there. You also see demand gen is very high, as it comes out. Then you start to see content and comms. And so this is more of a little bit of like where the marketing budgets were going. But I always think that's kind of an interesting one to kind of see how they're being allocated there.
The interesting part to me is demand gen literally like a bell curve. 30 at the bottom, 30 at the top, and then peaks out in the middle. Why do you think that is? What is it about 50 to 100 million companies, or even 20 to $100 million companies that makes them spend so much more in demand gen? And then they seem to, well, they build a brand, I guess, over time. Is that right? Is that a good assumption to make?
I think that's it. I mean, from my experience too, a lot of times companies will start off marketing led or product led, and then eventually they add a sales team, right? And events and sales go hand in hand, right? So a lot of times you start to see this shift back to sales there, and moving beyond just demand gen as far as like how you're growing. So I that would be my kind of initial hypothesis on that.
Got it.
Cool. All right, so as we go back here, let's see. We talked about that. This was an interesting, just where's headcounts going? So I think, as a CMO, I was always like, how should I structure these teams, and which should be the biggest or the small, or what are other people having the biggest, the smallest? And what you definitely find is like when you're just starting out, you have a lot of, people that just you have one for every team almost, right? Like there's just a little bit there that are helping out. And then as you start to scale and you get to the bigger, what you see are the biggest teams are demand gen, followed by product marketing, followed by events, right? And that kind of makes sense to me. Like, I think on the product marketing side, they're the ones that are for your messaging, your positioning, your competitive, your sales enablement, right? And so you need a big team there. You start to see events being much more used again as you go up more market. And a lot of these companies were SLG led, so you start to see more investment there. Demand gen is still critical, right? You need the pipeline for these sales teams, or you need to for that inbound model. So I just thought this kind of interesting, just kind of like hey, how are these teams, like how are other people structuring these teams, and where are the biggest investments?
Bill, I have a question about this. Actually, two questions. First question, how does this reflect with agency spend and utilization, you think? If you look at it, performance marketing agencies, there are quite a few of them, and there are a lot, almost everybody helps you manage your LinkedIn ads, or manage your Facebook ads or something like that. Does that mean that the performance marketing demand gen, would that be where they would put that in, or would they put that in growth marketing?
Yeah, I mean, it's kind of split, right? I think historically, when you're talking about leveraging agencies, I think that would fall under the demand gen budget, or at least it did for the companies that I worked at. Growth marketing is kind of this, newer idea. And for me, like growth marketing is this idea that, hey, you need to leverage multiple teams outside of marketing. So they're working with product. They're thinking a lot of like PLG type initiatives. So where that's high velocity type motions, whether that's creating virality loops, whether that's making the product simpler, the onboarding easier, a lot of things that you need to work outside a little marketing silo and think about a lot of different areas, right? But I think that's definitely been a trend. And I know, post-COVID, again, as companies try to be more capital efficient, I've just had a lot of companies reach out to me about like, hey, when you're Slack, how did you do product-led growth? And what was it? And how did you invest in it? And who ran it? And all the different elements there. In fact, like I've done a ton of videos. I did kind of a fun side project where I created this site, SaaSCMOpro.com. And I just started filming all these videos on like pricing and packaging and freemium models and how to do land and expand. And so if anyone's interested there, you can always go to SaaS CMO Pro and see all those videos for free. But it's definitely like growth is another area that I think growth marketing, people are starting to invest more in as they think about these repeatable, scalable go-to-market models.
I'll put the link to that and other links on the show notes, so it'll be easy for people to get there.
Cool. Good. Yeah. All right. And let's see here. This was another one, just like, benchmarks like, hey, how do people, how much money should I be getting in marketing, or what's normal, or how does do it? So one way was to do percentage of revenue. The other way was to do it based on, how much sales and marketing gets combined, right? And it's a trend that I will see sometimes where I'll work with companies and they may be doing great, but sometimes I feel bad because like their marketing team is so small relative to the sales organization. and they're just not getting that much money, right? And so this is another way to argue it. John had brought this up where, he would always try to go in and try to say, hey, like, I'm not arguing on percentage of revenue. I'm arguing on how much we're giving to sales and marketing combined, and making sure that marketing has, the right amount, the correct amount. I mean, part of the way I always think about it is sales a lot of ways like one-to-one knife fighting, and marketing is scalable, right? It's where you have one person that creates a program or an ad or piece of content, but that applies to a ton of people, right? Or nurtures or educates them through when they're doing ABM campaigns. So I think like on the flip side, like sales is so easy to forecast and build out. That's why a lot of SLG models get a lot of motion behind it, because it's very easy to go, okay, here's our ramp time, here's our, ASP, here's how much we, our commission plan, our quota plan. And you can model out, all right, well, we need to hire this many salespeople to grow this amount, right? Where sometimes marketing is a little bit more difficult there. Maybe they don't have the data-driven numbers to know exactly how much they can contribute. But this is another just kind of factor, for those, marketing leaders that are listening and are just like, hey, what's another way to kind of think about how I budget? Like, this is another ratio you could use.
Got it. And Bill, talking about ABM, since you mentioned that term right now, any update on that? Like how do you see that strategy working out? Is it in production? Is it evolved? Is it like a 2.0, 3.0 unbundled ABM? It was something around that came in.
Yeah, and I'm going to speak more off my anecdotal evidence.
Sure.
We didn't go down to the sub program level. So within demand gen, how did ABM? But at the same time too, this is for those listening. I think we're going to do this next year. Again, this was kind of an organic thing. So the more people that submit results, and also like if there's questions you want to hear or like, go into, like, let us know, right? And we can write that down and maybe we can try to get it in next year, or you could participate. And again, you'll just have a bigger sample when you read these. I will say anecdotally, like I feel like ABM, there's a lot more companies investing in that now. Certainly like as, most SaaS companies, they'll start SMB and move up market, right? Or their VCs will tell them, you got to move up market. Like that's where the money is. And I think like ABM, when done right, can be a really smart way to target a list of either maybe you're really strong in a certain vertical, or you really know your ICP and you want to be able to just target those key stakeholders. And certainly when you're selling to enterprises, you're not just selling to one person or 7 or 8 people. So ABM campaigns tend to work well there. And there's obviously, you guys know, there's so many different like flavors of ABM, right? Is this all your outbound targeted content? Does your website dynamically change based on who's arriving? How do you price and package that? Are you doing like physical events with ABM, gifting? There's a lot of different blends, but I always just thought of it as like, hey, we're basically saying like, hey, here's our target audience. Let's saturate them, as opposed to kind of doing a more shotgun approach to everyone in this segment.
Got it.
Cool. All right, growth rates. This was a super fun one. This is probably like the best finding, at least if you're a marketer, right?
Yeah.
So what we found out was that, hey, the fastest growing companies tended to invest more of their revenue to marketing. So we're talking about this segment over here. Right. And we initially we're all like, well, wait, is this true? Like, is it more like the marketing's driving this revenue, or is the flip side like, hey, they're already fast growing and now they want to invest more marketing? And obviously the data show correlation, but we don't know which one it was. And I could see good arguments on both sides there. I could see where, hey, like marketing is one of those things that's like, when you invest in marketing, you're kind of investing more long-term. Right. And there's a lot of different stuff you can do within marketing. Some is short, some is long, but you are generally investing more long run. So you could make the argument, hey, the ones that made that investment in marketing, started to grow the brand, started to grow the flywheel, you have these higher growth rates. I could see that as a marketer. I like that. But I can also see the flip side too of working with a ton of VCs and different fast growing startups. When a company is doing well, a lot of times they'll get a new round and, a big chunk of that round will go to marketing, right? To help them grow even faster and go into new markets. So I don't know, it's kind of a chicken and the egg. I'm curious if you guys have a perspective on this one.
I think there are 2 parts to it. I'm going to talk about if they are investing more, I would expect them to continue to grow faster. Like you said, whenever I make an investment in marketing, I expect some of it to hit my budget in 3 months, depending on your sales cycle, obviously.
Yeah.
But a lot of it too, when we were at Amazon, we used to always say, there's nothing you're doing today that's going to affect the business this quarter, next quarter, or even in a year. You're usually working for something 2 years out. Marketing is maybe not 2 years out, but it's kind of that way. Nothing you're doing today is going to affect marketing, which is why CEOs to a large extent tend to like a little bit more spend on sales because they know that there is a defined amount of time by which they start seeing that result. So in this particular case, my perspective is, okay, they're the companies that are growing faster, are investing more in marketing, meaning that they will continue to want to keep the position. That's why they're doing that. They're like, okay, we've invested so far,
Yeah.
we've gotten to this point. We might as well keep investing more because we're going to continue to be at that higher growth rate. And so it's a little bit of the treadmill as well. Abhi?
Yeah, I think now we're in 2025. A lot of data is available, which wasn't there like 10 years back. Things are very predictable. It can be run as a motion. I mean, if you look at 10 years back, we all used to rely on heroism approach of sales and things like that. And then we say like add more folks there, and then you could see the growth, which I think has started to change a lot in a lot of ways. Community plays a lot of like there are a lot of new motion which has come in. So the marketing purview is just expanding, every now
Yeah.
and then. So it's not just they're doing just the siloed marketing work, like to Bill's point earlier. Look at the number of things. Growth marketing requires you touch base every aspect of the customer journey, buyer journey, onboarding, repeat. PLG is a big motion. It has gone up, gone down, now it's come back again, sort of thing. So, it relates back to all things on investment in marketing. So, I
Yeah,
think
that's
that's fine.
that's a great point. And the other thing I've seen too is that marketing teams are starting to have a larger mandate. It's not just about bringing top of funnel, but
Yeah.
if you're in SaaS or AI, a huge part of your revenue comes from existing customers, expansion, new plans, new product lines, right? And so a big part of like when you make the investment in marketing is also like, hey, educating existing customers on what we do and our offerings and, building these like scalable nurturing drip paths and PLG type stuff. So yeah, I think a lot of it is like that just, the investment in marketing can hit in a lot of different areas.
Totally.
Cool.
I was going to say, I've also seen a couple of people, Bill.
Yeah.
Sorry. I've
No,
also
go
seen a couple of people talk about, I was going to show something, but I don't think that's going to be easy to do. I'll let you go back to sharing it. I was going to say, I've seen a lot of people also talk about taking marketing dollars and spending it towards customer success programs.
Yes.
The whole chatbot, which previously used to be get rid of customers quickly by providing them support. Few more. Bill, Abhi, I think you were the one that was telling me some BDR teams are coming under marketing, which previously wasn't the case. So the early part of the funnel is being adopted by marketing, and some early part of the customer success funnel is also being adopted by marketing, which would signify why marketing teams are getting bigger as well.
Yeah, no, absolutely. I think I had a CMO and she had always believed in like, okay, sales enablement, marketing, and I think it really depends on the company stage and product and situation and market. But marketing has come a long way. I mean, I was going to ask Bill about what he thinks about this new emerging title nowadays. They're calling themselves as revenue marketeers, or revenue marketing. So like, okay, we're not just the MQL people. We're like contributing an actual revenue. So
I love that. Right. Like I said, I've always been a little bit frustrated where sometimes people will have marketing have a very limited
yeah,
impact or path, or again, just focus on leads or just focus on top of funnel. And again, like I think like marketing is good at creative, we're good at content, we're good at automating stuff, we're good at doing it at scale. And you want that. Like those are all good, like very good capital efficient go-to-market models, right? And so I think extending them beyond leads, certainly to like, hey, did we close this deal or not? That's really important. And we have a slide just on metrics a little further down. But I think even beyond that, like extend marketing. So hey, you're in charge also of like, educating existing customers and everything the company does. And that's a big deal. Like a lot of these SaaS companies, like your early customers only think you do one thing. I remember when I was at Zendesk, we do like a road tour and we're going around, and there was a session where we'd be like, hey, we want to hear from you. What features do you want to see next, or what do you want to see on the roadmap, right? And inevitably every single place we went to, someone would raise their hand and ask for a feature that was already there. Right. And it always like kind of killed my soul a little bit. I was like, oh, and because of that, like we built their, I called it IPM, or in product messaging. It was this idea of like, hey, when you're in the product, where most people are, they're not on your blog or reading emails, but they're in the product. We'd have a little space devoted to like educating people about best practices on how to use the product. Hey, did you know we have this feature? Oh, we just released this. Here's how a cool customer is using it. And I think that's a really good example of where marketing can do things at a one-to-many scale to have that larger mandate. So definitely agree with you on that one. Cool. All right. So here are just some more supporting ones on where the budgets are going. We talked a little bit about that. Heavy on demand gen, heavy on events. Here is an interesting one, the people, program, and tech allocations. So we did ask, how do people split up their people versus programs for technology? And just so you know, in general, it tends to be like a 45, 10 split. It does obviously differ based on where you're at. When you're early on, you're spending a lot more on technology. And I think as the further you go down, the theory there is like, hey, you're getting these more at scale, you're getting discounts relative to it. You also start to see the program spend increase more. And that kind of makes sense too, logically. I know, when I was at Slack, at one point we ran a big national ad campaign, right? And we had slowly worked our way up to that. We started with like a regional campaign, a state campaign, then we worked to a national campaign. But when you're buying a Super Bowl ad, you don't need as many people. You don't need $6 million worth of people to run a Super Bowl ad. Like it just starts to work in the ratios there. So this was another kind of interesting one for those that are thinking about, hey, I have a total budget. How much of that should just be devoted to headcount versus people versus tech?
An agency falls under people?
I think, that's an interesting one. We didn't clearly define that, but historically, I don't know. I could see that on both sides, depending on is the agency, like, do they also provide tech or do they not? That is an interesting one though.
Many of the agencies also charge you a percentage of spend a program, right? For example, if you see a lot of companies will say, okay, if you're spending $50,000 a month on LinkedIn, I'm going to take 3% of that as well as part of our fees. So it could come out of program budget as well. Could be.
Yeah. Great point. Cool. So here were some interesting on the POG budgets. So what we found is companies that are POG invested more in marketing relative to the SOG side. And I think that, excuse me, intuitively does make sense, right? Like, especially if you don't have a sales counterpart, right? More it's going to go into marketing. But I also think too, like POG companies, marketers get pulled in a lot, right? Like a lot of the projects we did at Slack was marketers being pulled in. So for instance, like Slack, we spent a lot of time on having a really unique editorial tone and voice. And we wanted to put that into the product. So we had like, hey, people on our editorial team would work to rewrite all these dialogues in the product itself in the Slack interface. And that's sometimes different, right? Because a lot of times you'll have like the backend developer writes all the prompts and the dialogue, and they end up sounding very like robotic and not fun. And a big thing for us with the POG motion was we wanted it simple and easy and fun and delightful to use, right? And so that was a good example of like marketing bringing it in. Or a lot of times you'll see like, hey, having a strong design, but infusing it into the product too, right? You don't want marketing just to have a really fancy website, but then you go into the product and it's all like white background, black text, and it's super boring, right? Like, because, again, different go-to-market models, but I always like the model where you delight people, they have an awesome experience, and they go tell others, right? And like, it works really well. And marketers tend to be good at like creative and thinking about how to make things simple and how to give them little delightful experiences. So I think that was an interesting finding that the POG companies do tend to invest more on the marketing side.
And the last point down below, it says founder-led models are common for, I would assume it's less than 5 million, or is it greater than 5 million?
That's an interesting one there. I would have assumed it was the less than $5 million segment, but that's an interesting one. I don't know if that was a typo or if that was specific there. I would think that would be a typo. Yeah, good catch. I like it. Again, so you start to see here more, this is kind of broken down by that people, programs, tech. So you start to see, again, the product-led side with a lot more in the program spend. And again, I think that's a lot of that is also like when you get to that POG model and you start to create more of a um, that flywheel motion where they can just leverage more of the program spend relative to the amount they have on the people side.
I have a question for you.
Yeah.
And that question is, a good part of our customers are also B2C companies.
Yeah.
Now, their marketing mix and model is a little bit different. I wouldn't say it's dramatically different. Initially, my thinking was, oh, that's a completely different beast. Turns out it's not a completely different beast. Yes, there are some changes, differences in the way they prioritize certain programs versus the others. But is it a good rule of thumb, given that you had a background in that? I mean, my company, when we went, I was in an e-commerce company that went public. When we were in the mix, programs was about 60% of the budget, and tech was about 10% still within the mix. We're still within that mix. You've had that background. If you were to say, if you didn't do this survey and you were a B2C marketing CMO, would you think to look at this survey and go, huh? Or would you go, yeah, okay, yeah, sounds about right. Where would you fall on that spectrum?
Yeah, I think B2C companies definitely have a much higher percentage on the program spend. And because when you kind of think about it, when you're B2C, marketing is really marketing and sales, right? They're ones that are marketing to everyone. They're trying to get them to buy, right? And again, they're trying to do it at scale. So a lot of it is they're using more advertising type programs. And that scales really well. Like it allows you to have that program spend. And it is interesting. Like again, when I came to B2B, it was interesting because so many of these consumer type plays worked really well in B2B, but just a lot of people in the B2B side just hadn't done it and they weren't comfortable with it. And they were really like, let's make a white paper and run an event and do a top-down sale. And so I think like there's definitely opportunities there. I think that's a great idea for a lot of these B2B SaaS, for even AI founders, is don't always like be dogmatic about like, oh, they have to have B2B quote experience, right? Like bring in people that have a consumer background. Like the tactics they use a lot of times are very repeatable. So for instance, like, and you guys see this, right? Like I was always a big believer that, spend your money where the people's eyeballs are, right? And right now, people's eyeballs are on their mobile phones and they're on video, right? So they're on where that's TikTok or LinkedIn or X, but they're watching all this video, Instagram on their feed. And, a traditional B2B software company would never think about that, like creating like video and targeted ad campaigns or, leveraging an ABM for those stakeholders. But if you're in B2C, you're like, oh yeah, like I know how to do that, right? Let's put it together. And here's my 6-second bumper ad for YouTube. And, there's a lot of things you can do. So I think just, again, being open-minded on these different go-to-market models was really important.
And yeah, and just one real quick point. I mean, post-COVID, when we have seen this whole rise of prosumers, everyone's using Zoom for work, for personal use as an example. That has actually created a whole level of like similarity in a lot of ways and how, you kind of discover a brand and talk about it and then sort of use it. So there's a lot of overlap now we're seeing, which wasn't there earlier. So
yeah, totally. Yeah, agreed. So this was a really fun to talk about different slides that got like Bill all angry and mad. And this was definitely one of them, attribution. So like one thing I implicitly always saw was in B2B, you have these long journeys, right? Very long journeys, like 10, 20, 30 interactions, right? Those that have kind of really dived into it kind of intuitively understand that. But there's this old attribution model that still keeps sticking around, and that's first or last touch. And we would still see, for certain segments, up to 65% of the people would still be using first or last touch. And I always thought that was just really, it was a really bad like metric because, if someone interacts with you 10 times before they become a lead and you give everything to all the credit to the first thing they did or last thing they did, like it gives kind of a distorted view. And I would also see this effect play out in like meetings with the C-suite and the board where they didn't even know they were kind of looking at, I would argue, really slanted views or bad views of like what they thought was driving revenue. So the good news is I do think you start to see as the companies mature, they do start to invest more in multi-touch. And not saying like, attribution, first, last, multi-touch is the only way to do it. There's mixed media modeling. I would use a lot of, control groups when we were at Slack. So we'd run like a campaign and Denver, Austin, and Seattle, and then we'd have 3 similar sister cities that didn't get the campaign, and we would measure the results. So I think there's a lot of different ways you can do it, but it's amazing. First and last touch doggedly continues to remain in the B2B SaaS space. So I don't know if you guys have a point of view on that one. I thought it was pretty interesting.
Yeah, no, you nailed it. It was a kind of a shocking moment for me personally. I mean, when we started iCustomer, we were like talking about all this AI-led insights, and we carved this new category. We're trying to work towards like GTM decision intelligence. We were like,
Yeah.
okay, now you can simulate and you can take decisions and activation. And then like, and we started talking to a lot of CMOs and VP marketing, and they're like, dude, I don't have my attribution in place,
Yeah.
you know, and it is still, and it was shocking to us that even in 2025, people are still struggling a lot. Either they have this silo point-based solution, a tool, but they don't get this whole unified analytics, a unified attribution. I mean, they have all these channels and they're actually spending so much money in those channels, but just putting these all things together into a unified analytics report is a task. It's a project,
Yeah.
which and it's
Yeah,
crazy.
and interestingly, like one of the teams I always over-invested in when I was building out my teams was marketing ops, right? And
Yeah.
interestingly, you saw like in the previous slide, that's not one of even the top 3 or 4 teams that people invest in, right? So you kind of see this sometimes, like, and I think you feel more when you're at the board level where they're asking really good questions and you're a little uncomfortable with like your model. But yeah, this is definitely an area. And definitely like I would encourage like B2B marketers, like or B2B CMOs, like, hey, if you believe that these are longer journeys and you want to nurture and educate people along the way, like you have to move to something that shows the value of those in between type touches, right? Otherwise they get no credit, and everything. Like this is why I think like Google SCM got so big, was because they were like the last thing. Like people would search like, okay, I'm right about, yeah, what's the URL of that company? They type in the name and it's like, oh, well, our branded SEM campaign did amazing, right? Like, did it really? Like, is that what really drove it? So yeah, anyway, attribution, lots of opportunity, I think, to improve as an overall market here.
The interesting part, Bill, is the more I talk to people, almost every day, we have at least 1 or 2 conversations with CMOs, some people lower down the funnel. Everybody wants to be or claims already to be a data-driven marketer. And then you look at the under the hood and what their data-driven marketing is, typically runs, well, as you would expect, on top of spreadsheets and pulling this data, that data, the whole 9 yards. And then when you look at the 2 layers below, we were with a customer a couple of days ago. They've got 17 different events pulling into Google Analytics. They all don't work. So attribution is broke. I mean, it's very clear that they're just firing events and UTM codes into a centralized database that doesn't have any way of knowing what works when. But they're going to increase their spend on Google search by another 30% this year. So I went, okay, you said you were going to be a data-driven marketer, but the data is clearly not perfect. They're like, yeah, but we know that it works very well. So the data-driven marketer knows.
Google's got a good business model. I'll say that.
Yeah.
Being disrupted now with AI, but for a long time that was the golden goose for them. Oh man. Okay, so maybe we'll wrap it up here. I know we've just got a few more minutes on metrics. I'm a big metric guy, so I was always like, I was really curious, like, hey, what are people using as their top metrics, right? And this was an interesting one, right? Like, there were a couple interesting stats here. So the good news is like, marketers, at least in the B2B SaaS space, are moving away from just pure MQLs. They are moving to like, hey, are we generating pipeline, right? Which I thought was, positive. The interesting thing is that you didn't see a lot on end revenue, right? So marketers still don't kind of share that end revenue goal. They certainly don't share the customer revenue goal. And then the other thing is like, very few, only 8% had some type of brand type metric here. I always say like demand gen is kind of like short-term leads and brand is long-term leads. So, when you're exclusively focused on this side of the funnel, I feel like you sometimes get put in a little bit more short-term mindset. So there wasn't a lot of awareness. The other thing too is there weren't a lot of PLG type metrics. So I'm a big fan of PLG and how to grow. So there weren't things like measuring your daily active users or measuring your net promoter score. measuring things like product qualified leads, which is a different slant on how people go through the funnel. So just kind of interesting to see like where the marketing metrics were kind of landing.
Interesting. Bill, anything you noticed that regarding metrics, like more specifically with certain set of CMOs, that is this like a, like, I mean, I'm sorry, I'm trying to find the right way to put this question. Like metrics and marketing is like table stake, right? But when you done the survey, did you actually heard back from CMOs and leaders talking about that they're still not able to kind of have this running billboard or sort of a revenue dashboard and see like if they're trying to hit there, but the data is not there, or they're still frustrated about getting to a more metric-driven marketing? Well, it's hard to imagine like metrics and marketing kind of two things separate, right? Because if you're running like $100 million budget for those companies, you have to have these things in place, not just from a campaign level, but like a
Yeah.
holistic sort of a thing. So I'm trying to kind of just understand from you, like, is it still a pain area? Like people, and what part? Is it more in the tech part and data part, or putting the business model or not aligned? That's why we're talking about the whole rebuilding a revenue model in the companies. So tell us something about that.
Yeah, the biggest pain points that I see is there's just a huge desire around marketing metrics. I remember I did a post on
Yeah.
LinkedIn where I did a whole SaaS CMO Pro video on marketing metrics, and it got a ton of people were like, well, what do you use? Or what is this? Or you're missing this, or it should be this, right? So there's just a lot of like strong opinions on, what is the right metrics to track. I think, from my experience, a lot of times, when you go down the SOG path, you kind of like get boxed into like leads or pipeline is your main metric, because you just have the sales leaders are just constantly, we need more pipeline, we need more we need more leads, right? I think we're companies I've seen kind of like break that, or where they've maybe adjusted their model, their product led growth or their marketing led growth, is you start to see more the brand metrics. So, aided recall, unaided recall, sentiment, share voice, share conversation, sentiment, tons of like good options there to choose from. Or the PLG companies, again, will look at like time to value. They'll look at activity, daily active users. They'll look at like net promoter score, because that has a big outcome on how fast they're growing. But there's just a lot here. And I certainly think like the tooling, like you said, we're not in marketing investing in the tooling, in the marketing ops side of things, to where we don't always have the right, answers or the best data. Or Ray, who is really like passionate about it, he loves the CAC ratio, because that actually looks at like marketing expenses over total new ARR, not just pipeline. You have to look at it from an efficiency standpoint. So like I said, I think it's a fun one, and that's part of like the benchmarks too, to just kind of get a feel for like, well, what are other people tracking, or is that right? Is that wrong?
Yeah.
Maybe we should be moving in a different direction.
Cool. So we're almost top of the hour.
That is
And
perfect timing, because that was the last big finding there. So right on time.
yeah. But just one final question I have,
Yeah.
and we'll have if Mukund has anything else to add. But any piece of advice you want to give to fellow CMOs who may be listening to this, and
I would just say like, hey, if you are an SOG type company, again, nothing wrong with that, but there are lots of different go-to-market models out there, right? Marketing led growth, product led growth. There's so many innovations that are coming out. You guys see it on the tech, what's possible from a targeting perspective. I'd just say like, hey, like hopefully this benchmark report can show you like there are some different ways to grow, and sometimes those can be very effective. And so, yeah, I think it's super fun. Again, just reach out to me on LinkedIn if you want to see the report. Happy to, share that with you. Or if you like these SaaS marketing type topics, go to SaaS CMO Pro. I've got a ton of videos just on all these different pricing and packaging and branding and PLG and different ways to do things.
that's awesome.
Yeah. No, this was awesome. Thank you, Bill, for the time. Thank you very much for the report and for the session itself. I'm sure that we will have a few questions that people will probably reach out to you either on LinkedIn or come directly to you. And we'd love to have the conversation again. My suspicion is we'll probably be with you again in about 3 months or so,
Yeah.
giving you, hey, this seems to have been changed from time to time. But the good part is there are two or three things happening at the same time that have changed things for marketers. So obviously we know about ZIRP. That was not something that we did on our own.
Yeah.
AI is dramatically changing marketing. Some people are stumbling into it. Some people are doing it with a measured approach. Other people are just denying it. I know enough CMOs who still won't allow AI of any sort within the company, and big, large company CMOs, not just small ones, right? So that's another big change. I think the third interesting change is the fact that people realize now that distribution marketing seems to be one of the other places that you can really truly differentiate, even as a B2B SaaS company. Not just, okay, I've got a unique feature in the product, because the product feature capability thing is becoming increasingly commoditized, right? Almost everybody can
Absolutely.
add the capabilities much as quickly as you can.
Yeah, that's such a great point, Mukund. I see that every day where I will have a really cool AI company reach out to me and they're building this autonomous agent, and it's amazing. But then it's also like, by the way, there's also 24 other ones that also do this.
Yeah.
And we aren't growing that fast and we need help. And it's like, that's where marketing can really help, right? Like, how do you differentiate your messaging, your positioning, how you price and package, the growth model that you're using, SOG versus marketing-led growth versus like product-led growth. There's so many different ways to do it. And I do think, like, you're right, like the features are going to get more commoditized. You're going to have so many more AI companies building traditional B2B SaaS, but for a fraction of the price. And so I really think like the go-to-market model is going to be that much more important for, which companies are going to succeed and thrive and which ones are going to die.
Awesome. Thank you so much, Bill. Thank you, Abi. This was terrific.